So I'm delighted today to be joined by Mark Matthews. Now, Mark is the head of research for Bank Julius Baer in Asia. Those of you will know I often give reports here on my daily updates from Julius Baer, normally from their chief investment officer. But Mark's view is very much more the kind of global macroeconomic view, and him and his research team at Julius Baer obviously work together to produce all of the reports and the stuff that that the bank uses for its investment advice and decisions going to its clients. Julius Baer are the largest pure private bank in Switzerland, and a very big player in the global wealth scale sort of space. In fact, if you Google my name, Jeremy Hubbard and Julius Baer, you'll see a video that I did with them around democratizing wealth and empowering small businesses in their community. Yeah, I think you'll find Mark's insights into the virus and the historical comparisons and the way markets are moving, and then particularly around impacts on China and on other economies around the world. I hope you find this really valuable, something a little bit different for Friday today. And actually we have a live webinar with Mark and some other speakers on the 6th of May. So we'll keep you posted about that. But right now, I'll hand over to Mark.
Virtual good afternoon, good morning to you, ladies and gentlemen, wherever you are in the world. And it's a pleasure and an honor to present to you today. And in the next 10 to 15 minutes, I would like to try to convey some thoughts on the world economy and market to you. And to get started right away, let me just say that global pandemics don't happen very often. And when they do, they've been a core part of the human experience throughout the ages. They often help to define history, and I can give you three quick examples of that. After one pandemic in the 6th century, the Roman Empire was divided, and that eventually ushered in the Dark Ages. In the 14th century, so many people died of the bubonic plague in Europe that there was a shortage of labor, and wages went up, and it was the beginning of the middle class in that continent. And then if smallpox hadn't wiped out 90% of the populations of the Americas in the 14th century, then people like my ancestors wouldn't have been able to migrate there in such great numbers. And I'm sure as a result of today's global pandemic, there will be millions of changes, small and big, some of which are impossible to foresee, but some of which we can foresee, and I hope I can tell you a little about those. As I said, global pandemics, they don't happen that often. Actually, before the coronavirus, there were only 3 in recent memory. And those were the Russian flu, 1888 to 1889, about 1 million people died. The Spanish flu, we all know, 1918, 1919. Who knows how many people died? 17 to 50 million people around the world died probably in that pandemic. And then the Asian flu, 57 to 58. Went dormant for 10 years. It came back in 68, 69. Both episodes saw about 1 million people die. This one, we don't know how long it's going to last, how many people are going to die. It's still a black box. In other words, it's a complex thing. The internal workings of this virus are hidden. They're not readily understood. All we know is it's highly contagious, but we still don't really know how contagious because many people who get it don't even show any symptoms. And so the severity is difficult to ascertain too, but we do know that somewhere close to 200,000 people have officially died of it, unofficially many more, I'm sure. And there's so many strange things about this virus that emergency room doctors and epidemiologists tell us they've never seen before. For example, it's not just a respiratory disease. There are epidemiologists will tell you that it attacks different organs in the body. It has several mutations, we're finding out. Some are more deadly than others. But what we do experience today, which is different from those previous pandemics, is an overload of information. Even if you think back to swine flu 2009, SARS in 2003, we had the internet back then, but maybe you'd look at your computer once or twice a day and read the news, and maybe you'd read a newspaper, watch television. today we get about 200 messages about this virus per day, constantly being bombarded by messages on our mobile phones, WhatsApp, Facebook, YouTube, and it's an overload of information and it's stressful. One thing we know for sure is that a way of avoiding this virus is by avoiding people. And Hong Kong actually was one of the places that probably has the best success in that, because they already experienced the protests last year, which had got them used to staying away from large crowds, and they have a memory of SARS. So Hong Kong was also very good at testing, isolating, tracing. Unfortunately, most other countries in the world, most other places didn't understand the importance of things like wearing a mask and maintaining a social distance. Now they do, because it's a very sneaky virus. It takes about 5 days on average, sometimes up to 2 weeks between the time of infection to symptoms. And of course, many times symptoms don't even appear at all. And so that's why the virus got far more out of control in places like Italy and New York City than it did in Hong Kong. And now about a third of the world's population is in lockdown in one form or another. Movement is heavily restricted. For example, here in Singapore, we're not supposed to go outside unless we're going to the store or the hospital. We're not supposed to go with anybody else. And when we do, we're supposed to wear a mask. And if we don't wear a mask, we get fined $300. And movement around the world is ground to a halt too. I looked at the arrivals here in Singapore today on Changi Airport's website. 8 airplanes are arriving in Singapore today. Some people say this was too much and the harm done by the shutdowns is bigger than the goal they were meant to accomplish. I won't go into that debate, but I will say the good news is that these restrictions appear to be working, and confirmed cases around the world peaked on the 6th of April. They've been stable since then. It takes on average 2 weeks to recover from the virus unless you die. And so what that should mean is the total number of cases are going to start going down unless there's a major flare up in some new place in the world. And the market is focused on the US the most, and the data in America suggests that new cases peaked around the 15th of April. And by the end of this month, they should have the ability to test about 500,000 people a day. By the end of next month, 1 million people a day. And by June, there will be mass serological testing available in America. In other words, everybody can be tested. And that's important because when you test, you can identify the people who have it, isolate them so they can't affect others. And over time, gradually, countries can end these lockdowns, because you just can't keep people in lockdown forever. They run out of money, it affects their mental health. The big worry, of course, though, is in ending the lockdowns that we get a potential second wave that epidemiologists estimate in the case of America could start around November. Of course, now we know how to practice better hygiene, wearing masks, social distancing, so we can try to go back to normal without probably the same major spread that we had a couple of months ago. But it's not going to be 100%. There'll be staggered work hours, restaurants that are operating at 50% capacity, that kind of thing. And to really go back to normal, we need a cure for this thing. We need a vaccine. Hydroxychloroquine is the most controversial cure because Donald Trump has supported it. It has been proven to work combined with an antibiotic and zinc, but it's also known to have severe side effects. And then Gilead's drug remdesivir caused the market to go up last week. Now people are having second thoughts, but the trials have been inconclusive. So there's still probably promise with those drugs. And there's room for hope because about 80 groups around the world are researching vaccines as I talk, and some are entering clinical trials. The one that's thought to be the front runner, at least for now, is being developed at Oxford University. The UK's top epidemiologist, Dr. Sarah Gilbert, said she thought a vaccine that she and her team are working on could be ready in injection form in millions of doses by September. It's being fast-tracked as much as possible. Human trials started on Thursday. So I want to say things look bad now, but science is making big and fast strides. We shouldn't be afraid to say that this virus will be beaten, and sooner rather than later. The problem is the economic damage that's being done in the meantime. The International Monetary Fund forecasts a 4% drop in world GDP per capita this year, more than twice as bad as the global financial crisis. And instead of 60% of countries registering negative growth as they did back then, it'll be 90% this year. But to call it a recession is probably incorrect. It's really unique in modern times. The economic contraction was purposely induced to prevent the healthcare systems of the world from being overwhelmed. And so if there is medicine that can cure people, like the ones I described, and if a vaccine is on its way, possibly even before the end of this year, then we can say that this could be over quite soon. And even the IMF is expecting a recovery next year as big as the drop that it forecasts for this year. But there is serious pain in the meantime. Probably unemployment in America today is about 20%. And I might add in passing that you can understand the halt to immigration in that country because they have to find jobs for all those people who've lost their jobs. And you can understand the tariffs, which were originally meant as a negotiating tactic to get China to open up. They now have a real practical purpose, bringing back factories to the United States, because there are 25 million people, over 25 million people who've lost their jobs in less than a month. But anyway, it is amazing when you see these economic numbers and contrast them to what's going on in the markets, because the S&P, which dropped 31% from February 19 to March 23rd, has risen 25% since then. Technically, I know it's difficult to believe, we're in a bull market. How is that possible? Well, one reason is the massive fiscal stimulus and monetary stimulus that has come out as a result of this virus. In the case of the United States, the fiscal stimulus, if you add it all up, is about 17% of GDP. And that sounds extraordinary. It is extraordinary, but it's done that before. In times of war, the country's deficit always increased by a lot. And then there's the monetary side. As I said, and the mountain of central bank stimulus since coronavirus hit the Western world makes quantitative easing that followed the global financial crisis look like a little anthill. And this time, the Federal Reserve hasn't limited itself by buying treasuries and mortgage-backed securities. It's buying directly and indirectly everything from investment-grade corporate bonds, high-yield bonds, student loans, credit card debt. I could go on and on. So I can only think that the Fed's commitment to buying literally everything in as large a size as it chooses is why our financial market recovery has been so very powerful. But what makes less sense is how fast it's been. In the previous corrections of 20% or more, the market didn't just drop like an elevator the way the S&P did in the space of a month in February and March. It took many months to get down 20% or more in the previous corrections. And then it had to find a bottom and build a base and start a new bull market again. And all of that took about 4 to 6 months usually to build a base before you start moving up again. The closest year we have to compare ourselves to is 1987, because 1987 was a drop of 33% in the space of 2 weeks. And it was an event-driven bear market, computer-driven trading models, computer program-driven trading models kicked in, and the market went down and down. And so I think that there is a commonality with 1987, but even in 1987, after it reached its bottom, the market rose 13%, then it fell another 12, it found a new bottom, and then it took 2 months before it started grinding higher. And you probably know what ours has done. It just got to the bottom on March 23rd, and it's been up since then about 25%. So it's really very unique. And I would have thought that with the general realization we can't all go back to normal until there's a vaccine, and that's still at the very best the end of this year at the earliest. So we're going to be in a sort of netherworld of staggered work hours, restaurants to have to keep every other table empty, that kind of thing. Well, I would have thought we shouldn't keep zipping right back up to where we were before this happened. And my best guess is that we are going to get a correction that'll take us down about halfway toward where our bottom was, which in the case of the NASDAQ, for example, would be around 15% below the current level. I would say, though, the NASDAQ is special and the internet stocks are special because they are very agnostic to the economy. They have the lowest, well, I shouldn't say the lowest, but the correlation closest to zero of any sector to economic data and bond yields. And they have strong structural growth. They have reliable earnings. So even if we do get a correction of 15%, frankly, I would be looking to buy into that correction because those are still the companies you want to own. The last little word I'm going to say is on China. And at this point in time, I also hesitate to say we should expect a lot stronger returns out of China because like in the US, the earnings still have a lot of downside. Increasingly, it's not so much about the entire market, more about sectors. And the sectors that look the best in China on the surface are exactly the same as the US, internet and e-commerce. But those stocks probably have run about 80% of their course so far, as have the consumption recovery plays. One pocket that hasn't gone up a lot is the technology component sector. It's been heavily beaten up because of the pandemic, and we know this global supply chain has been affected, and it still is affected. But if we're optimistic that the world is going to continue to unlock, then that should be, I think, where the next up move comes in those component makers listed in Hong Kong and in China. And I would also say one thing that is coming up in the old economy is the infrastructure sector, because the Politburo has made it clear it will help smooth the recovery, not just with new infrastructure, but also old infrastructure. New infrastructure is 5G, medical technology, electric cars, non-fossil fuel energy. By all means, those are things to own in China on, let's say, a 5-year view. But the old ones that I think are going to rally because of increased stimulus are things like cement and construction and machinery. Ladies and gentlemen, with that, thank you for your time.
No, thank you very much for that, Mark. Thank you. Can I just ask a couple of questions on there? I guess one big one that lots of people will be looking at is oil. Does oil just bounce back when demand comes back? And also, what impact does the low oil price have on things like renewables? Because clearly, we'd love to switch away from a hydrocarbon economy, but when oil is when they're giving you money to take it away, there's not much incentive.
Yeah. Well, the thing is that what everybody would like to know is, how can I buy oil at the price today? And the thing is, unless you're in Cushing, Oklahoma, and you've got a lot of empty storage tanks, you can't, because it's not that price in Dubai or Singapore. And if you look at next year's futures, they're already trading well above $30. So I would just say it's a rational market, and it has to be at a price that's high enough that there will be production to meet demand when things start getting better. And therefore, I actually do think that oil will be above 40 this time next year, because I think the economy is going to be in much better shape next year. And the impact on economies is varied. I mean, obviously, it's terrible for the Middle East. It's fabulous for India. It's good for China. And I would say it's just neutral for the US, because they have a lot of production, but they're also huge consumers.
Yeah, and I guess they can restructure all of their oil companies quite easily. They have very liberal bankruptcy laws.
Yeah. I mean, those assets will remain in the ground. I don't know if it makes sense to save those companies or support them, because they're high-cost producers. But certainly, if the assets are moved from one hand to another, they're still in the ground.
Yeah. And then China. I mean, obviously, with the trade war, people were already starting to move manufacturing out of China. There's a political angle to this, that they're trying to throw a lot of blame for the pandemic at China, possibly unfairly. But also, like you said, supply chains, people need to employ people. They're going to bring things back onshore. Do you think that's a big risk to China going forwards?
Yeah, I do. I think it is a risk. And I think the pandemic is really just enforcing a trend that was happening anyway, which was that people didn't like being so reliant on China. And particularly now we realize in some key areas like drugs and vitamins, where 90% of supply of antibiotics and whatnot comes from there. So so many people have lost their jobs in other countries now that governments need to find jobs for them. And it's a perfect match of being more nationalistic, producing more for ourselves so we're less vulnerable, and finding jobs for people. So absolutely, I think this is a very real trend. I also don't necessarily think it's a bad thing for China, because what it will do is inspire China to go its own way. And, if it was a little country like, I don't want to pick on anybody, but if I said Thailand, and all of a sudden Thailand lost all of its manufacturing, that would be a really big problem. But China is a country of 1.4 billion people with a very large middle class. And still, I think what they can do is grow that domestic economy. And I mentioned earlier, through stimulating the new infrastructure like 5G and healthcare and driverless cars, electric vehicles, non-fossil fuel energy. Those are all things they can put a lot of resources into that will boost growth. And the other thing I would just point out is that this move to become more self-reliant, China is doing the same thing. So they buy, I think, at least half of the semiconductors they use are from overseas, and they don't want to be so vulnerable anymore, reliant on U.S. semiconductors. So big semiconductor industry growing very fast in China now because of that, which is highly investable.
Mm-hmm. Yeah, I've got a few positions, a few positions there. The other thing is your CIO on a recent call said that we're moving away from an era of neoliberalism to an era of state-sponsored capitalism, which I thought was a wonderful choice of words. Now, obviously, it does seem like there's no risk off or no risk on anymore if the government's going to intervene every time there's a challenge. Is this a shift towards a more socialist kind of capitalism?
Essentially, yes. Essentially, yes. I mean, the way I would put it is the last 20 years were very good for capital. The next 20 years are going to be very good for labor, simply because the gap between the rich and the poor got too wide. And so this was a trend that was happening before coronavirus anyway. People were talking about modern monetary theory. Andrew Yang, who was one of the early Democrat Party candidates, was talking about, I can't remember the number, was it $2,000 a month per person in the United States check? And so a lot of countries are talking about universal basic income now. I do think it is a trend, and I do think that it has consequences. And the thing is, you don't really want to be moralistic about it. I mean, certainly the way I was raised is that that's not good. You should let market forces determine where, the price of assets. That's the most efficient way to run an economy. But it is what it is. And I think rather than protesting against it, we should just adopt to it. To me, the major winner in this is gold, because if countries are going to introduce things like universal basic incomes, they are going to have to borrow a lot more to finance that. And that will be naturally depreciatory for currencies relative to gold.
Yeah, I mean, my feeling has always been that when you pervert the free market, you often get unintended consequences. And I actually wrote in an article recently that I felt that if you had UBI, you'd simply have financial institutions that were willing to buy your UBI check from you. So they'll give you 100 grand and you give them your check every month for the rest of your life. Wonderful for the sale of cars and big screen TVs and other things, but possibly doesn't meet the purpose for which it was designed. Yeah, I think there can be some unintended consequences with that. Inflation is the one you've just mentioned, but yeah, I think there could be a lot of other knock-ons. And I think it's a big risk.
If you go back to the 50s and 60s, America was actually, and I think most of the Western world, much more like this world we are probably entering into. The taxes were very high. There were lots of efforts to support people through social security networks, and of course they were introducing a lot of these things for the first time. But they also had, the New Deal, massive infrastructure projects. So all I would say is it has been done before without ending in total disaster. Just to reiterate, I think the beneficiary of it, at least the most obvious one, would be gold.
Yeah. I think the US, when it had really high tax rates, we also didn't have much in the way of globalism. And of course, capital's much more free to move around the world now. So I think, I think the European Union suffers from this, which is it has this high tax environment. And so people just don't base their businesses there anymore. They vote with their feet. But it's been really, really fascinating. Thank you so much for taking the time to talk to us. Look forward to speaking to you again on the 6th of May, which I hoped would be unlock time, but it seems like it might still be lock-up time for us here in Singapore.
All right, I look forward to that too.
Thank you.
Bye-bye.